Hey everyone, thanks for joining me today. My name is Kinjal Shah. I'm one of the general partners at Blockchain Capital, where we've been investing in crypto and blockchain technology for over a decade now. And today I'm going to talk to you guys a little bit about why I think we're at this very unique point in time where investing in crypto for the past decade has really brought about this question of why should crypto exist, or why does crypto make sense? And I think we're really about to move past that. And I think there's some implications on the investment side. So first, I just want to talk about this cycle of infrastructure and applications. This past year, there was a lot of debate around, are we overfunding infrastructure? Are we underfunding applications? And I think a great discussion to be had for the industry, particularly as we come out of this last bull market cycle. And technology, regardless of whether it's blockchain or the internet or whatever it may be, has always seen this as an evolution, right? Infrastructure is built to address a problem, applications then take off, and then some more problems are unearthed. From there, there's infrastructure built to solve this. So in this last cycle, for example, we saw a lot of challenges relating to scalability, relating to user experience, the cost of fees, and a lot of infrastructure over the past 18 months has tried to address this. I think, however, we're at this point today where rather than seeing infrastructure and apps bifurcated in the market, we're starting to see them come together. And so what do I mean by that? I mean, applications are building their own infrastructure in-house to give them an advantage in cost. Infrastructure is going up the stack, trying to build applications so that they have a better relationship with the end user and can therefore capture more economics. And so this cycle of infra apps and infra apps that we've seen over the past decade is starting to shift. We've reached a point where infrastructure is good enough, or we have a path to seeing how it could be good enough to build whatever we would like with this technology. Perhaps that's a overgeneralization, but I think the sentiment has been clear over the past year and a half. And so when we talk about blockchain, there's always this, question that keeps coming up of when is mass adoption here? When are we going to sort of cross this proverbial chasm of mainstream use cases? And the real answer is that it's not going to be a point in time, and it's not going to feel obvious. Instead, I think we're at that point already, and I want to talk to a couple of metrics that I think suggest this. There's many, many data points you can pull from, but a couple of interesting data points, and then how we might want to shift our view when it comes to investing as a result. So first, just want to touch on the stablecoin industry. If you're not familiar with stablecoins are effectively a digital asset that is pegged by a currency, usually government-backed. USD is the most popular. And over the past 5 years, we've seen this grow from a small market of $10 billion to close to $200 billion in issuance today. And so I think the story of stablecoins has been captured many times over, but the point that I'm trying to get across here is stablecoins is an example of a use case that's not experimental anymore, and I would say isn't at the product market fit stage. It's well surpassed that. Stablecoins today is a thriving and growing ecosystem. It supports dozens, if not hundreds, of businesses, and is a great example of an area of the industry that has really reached a new level of maturity. The second thing that I want to talk about is institutions. So when I first entered the space in 2017, I came from Fidelity. And at the time, the conversation was, okay, when are the institutions going to enter blockchain and really make this a more legitimate space? And this conversation has been happening for the past 7 years. But if you look at the market today, I don't think there is an institution that would say crypto is going away. In fact, this year we saw one of the largest financial institutions, BlackRock, partner with a company, Securitize, one of our portfolio companies, to tokenize their own fund called BIDL. And if you look at this trend, RWA stands for real world assets. Real world assets is any sort of asset that you can tokenize on chain. regardless of the numbers on this graph, it's up and to the right. And I think what we're seeing is a shift from theory to actual live production on the institutional side. And then the last data point that I want to talk about is DeFi. And I'm not really going to talk about DeFi as a sector, but what I want to point out is when DeFi was first starting out in 2018, or you can sort of decide what date that would be, it was an experiment. We were rebuilding the financial infrastructure from the ground up. But now, 5 or 6 years later, DeFi has withstood a number of major shocks to its system, whether that's COVID, the regional banking crisis in the US, or even our own crypto cycle with FTX and other players. And through it all, DeFi continued to work, and we are seeing players like Aave and Uniswap prove to be resilient and prove that the technology works. And this is a brand new infrastructure that didn't exist just a couple of years ago. The last thing that I want to point out is that all of these players have announced that they're doing something in crypto in the past year and a half. It's not been a bull market. I think we're seeing some of the largest players lean in and really start to take the technology seriously. And so the reason I point to some of these data points is I want to ask this question of, when have we crossed this proverbial chasm, right? When is mainstream usage mainstream enough? And what does that even look like? In the past cycle that we just had, where we had this giant move up with NFTs and people were buying all sorts of things on chain, a big conversation we had around the investment table was, is it Web 2 native or is it Web 3 native? Or some people said, is it Web 2.5, right? That is analogous to what I think pets.com represents. Way back when this came out, pets.com, it was an idea, and it was for internet users that had pets. That today is the most ridiculous notion ever, right? Everyone is an internet user. Doesn't matter if you have a pet or not, you're going to find information online. And I think the same thing is happening in crypto, where we are starting to build things for crypto native users that like video games, or crypto native users that like XYZ. And the reason I think this is challenging is we are tailoring our products and our services to an audience that has very different expectations than the everyday user. And I don't think any of us would disagree that we are everyday users as well. We open our phone and we use, Twitter, and we use Instagram and whatever it may be. And so what I really feel we need to move towards in this next iteration of what we're investing in and what we're building is not Web 2, not Web 3, but rather just integrating with the internet. And so I think this requires a reframing of the conversation. So past 10 years, there's been a lot of questions. Why crypto? Why blockchain? Why does this make sense? I think we've reached a point where as an industry, we've proven the resilience of the technology, the value of it with things like stablecoins enabling cheaper, faster global payments. And frankly, there are millions of users around the world that have touched digital assets. And so I think the question needs to be framed as, why not crypto? And when will this work? Or how will this work? And I think that framing is really going to require both investors and builders to think about applications that not only can transform industries or products and services, but also can just work in the background, that can make something a little bit better, that can improve margins. It's not going to be sort of black or white. There's going to be a spectrum of products and services that are built as a result. And so we're excited about this at Blockchain Capital. I've been investing in the application space for the past couple of years, and I can say without a doubt that this year we've seen some of the most interesting and innovative ideas come forward. And I would be, remiss to say that crypto is not just about building, infrastructure and then apps. It's both together. And I think that's what the next decade of investing is going to look like. So yeah, thank you for joining me today. And I will be over there if anyone has questions or wants to push back on my thesis. Thank you so much.